Joe Ling is here with much more. Hey, Joe.
Hey, good morning, Dagan. The issue here in China is a question about the future of this Chinese government. The market continues to be jittery, further extending the world's worst sell-off. The Shanghai Composite closed down another 5.3% today, and then the Hang Seng followed in Hong Kong, dropping 2.3%, driving the markets down. The falling factory prices in December for the 46th month in a row. But the real worry here, Dagan, about those long-term growth prospects in China, whether the Chinese government can actually keep a handle on things to reassure global investors. And it seems like the answer is no, and this doesn't show any signs of stopping anytime soon.
Anthony, what do you want to know here?
Well,
from Joe or any?
well, listen, I mean, what I want to know is something that no one's going to be able to tell me is what the level of intervention is going to be over the next 6 months for China, because everything they've tried so far has failed.
Yep.
And so the real question is, do they do what I think is an obvious thing to do, is just let things go a little bit for some period of time?
It seems like they have done a little bit of both, right? They're trying to speak out of both sides of their mouths. They're saying that, okay, we're going to take away the circuit breaker, but yet you still see this falling 5%. It wouldn't have triggered the circuit breaker. And then you also have continued involvement with the yuan, trying to bring up that valuation a little bit. And, of course, a lot of these numbers that we're getting are government numbers, so they can't really be trusted.
They just look like they don't know what they're doing. They've lost control.
Well, if Jim Chanos is right and Kyle Bass is right, they're really growing at about 1 to 2% right now, which means that that's a recession for them given the magnitude of their population growth. And so what steps do they need to take right now to improve that? My guess is there's really not a lot they can do. This is something that's just got to flow out of the system.
Well, I would actually like to talk about that, because I think there is something that they can do, and this is the biggest overhang in the market, and everyone's getting worried now, is could they devalue their yuan even further? And people don't want to see that, because that's meaning it's really, really bad over there, that they have to take that step a little bit further. And what we're looking at, too, is that getting back to what we've talked about, I mean, what they're doing is leading to more volatility with the circuit breakers, right? It was meant to stop a precipitous decline. All it did is enact it even further, because now I need cash. I need to get out, because I don't know if the government's not going to let me sell or not.
But isn't that what you spoke of earlier, Dig? And that's sort of the principle behind all of this, is that there's so much uncertainty because there is no real communication, clear communication from the Chinese government what they're going to do or how long they're going to let all of this fester. I think that's one of the crucial...
I don't want to interrupt more, but just the fact that we're talking about this level of intervention is a sign that there's something seriously wrong. And so the last 10 years since the crisis, we are in the age of global macro intervention by governments. And what are governments learning? There's only so much they can do, and it's not working. Okay, so you have to pull back now. The Fed has to get into a normal interest rate zone, and the Chinese are going to have to let the market settle.
Do you think the Chinese should pull back now?
They're not going to, but they have no choice but to.
The more they do,
what they're doing, Morgan, is not working, because what happens is people
they're in no confidence building measures at the same time. I don't think anybody here in this room has any confidence that the Chinese officials running the stock market or running the economy really know what they're doing.
Well, what they were doing with the yuan last week.
Free market-based people, I think, sitting here in this room.
Well, what they were doing with the yuan last week, it smelled like a bar at 4 o'clock in the morning, and it was like desperation. And it freaked people out because they were worried. Hey, is the economy a lot worse than we even thought?
Yeah, so it institutes a...
Bar were you referring to?
Definitely a hole in the wall.
Been in a bar at 4 a.m. watching people getting together who probably shouldn't, look at, doing and saying things.
But last-minute measures, if you will. Yeah. Well, look, we're looking at the weakest growth for China since 1990. And if you remember where the economy was in 1990, it had just officially opened up. And so you have an entire new set of challenges that it's facing. If you look at the government documents and the strategy behind what they want to do, they claim they want to move in a more free market direction, but they can't do that because the volatility, the confidence, and the growth numbers just aren't there. But to cover that up and to maintain a level of stability for this growing middle class that needs to know that things are going to be okay, they're just doing all of these stopgap measures. And it doesn't look like, according to the analysts I talked to, that it's going to stop in the next 6 months.
But you also get the reaction from presidential candidates like Donald Trump, who threw out the idea of a 45% tariff on imported Chinese goods. He threw that out, and he seemed to backtrack on it in his interview with Maria on Sunday Morning Futures yesterday. But again, okay, let's put a 45% tax on every good made in China for the American people. That's really going to help our economy.
Yeah, and what Donald Trump was talking about is he was actually coming out and saying, listen, I need to control China, and how I'm going to do it is through tariffs. I'm going to need them to step up and be a leader and dictate to North Korea that China's going to come in and do some actions.
But that's more government intervention. It's our intervention, right?
But what else do the Chinese know? I mean, they don't know anything other than government intervention. It's not like they have some sort of history of...
The only thing people really need to know about China is that it's casino communism, right? And that's not going to work.
And you have to also remember the markets in China, the stock market is not actually that large. The only reason this is jittering markets is it's an indicator of a broader problem as well. So if you're looking at it from a portfolio standpoint, you don't need to be that worried.
What were you going to say?
Just remember, the reason why the United States is the largest economy with only 5% of the world's population is that we've had a free market basis to what we're doing, okay? And so the Chinese are going to struggle until they get to that point. As it relates to Donald Trump, he can't honestly believe that, or if he does honestly believe that and he becomes president, we should really be worried, because historically, tariffs like that have caused a deflationary global slowdown, and they ultimately lead to global wars.
Yeah, listen to Ben Stein and Ferris Bueller's Day Off, the holy smoot tariff. Okay, I'll leave it at that.